Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is 8 o'clock in the morning, March 11th, 2020, Wednesday here. For economic news events in the overnight session, we had MPC bank rate votes, monetary policy statement out of the Great Britain pound, and then at 4 a.m. we had Bank of England Governor Carney speaking, as well as the GDP, manufacturing production, goods trades output, industrial service, and industrial production. So that was our biggest event last night, and it was all in the Great Britain pound. This morning, CPI numbers and core CPI for the U.S., as well as annual budget release for the Great Britain pound. For the rest of the day, we had the federal budget balance at 1 p.m. BSI manufacturing index out of the yen at 650. MI inflation expectations out of the Australian dollar, and then the RICS house price index at the Great Britain pound tonight at 701. Tomorrow at 7:45, the main refinancing rate, monetary policy statement, and ECB press conferences will all be taking place in the morning, followed up by the natural gas storage at 9:30. And nat gas has been a pretty big mover here this week. So those are our main news events that you're going to want to pay attention to. We're going to start off by looking at our 30-year bond note, which was inside of this massive extension. And I had mentioned last night, this was in yesterday's video, guys, the 50% retracement at 179.18. 179.18 is a daily extension, and these ranges are the biggest ranges. Like most of our markets are the biggest ranges you will really ever see in the bond market. What was that, 2 days ago? Our range was 11 points. I mean, if you go back to like a typical day, we have 1/10 of that. 2 points is typically a big range on bonds. We had an 11-point range on Monday. We have come back into our 179.18 extension on the close. Now, this close, the close of yesterday was very similar to the close of Wednesday last week when the S&P double topped and really aggressively began selling off. And I want to show you why that is. So this extension here from the 26th, that high to high, last Wednesday we closed on its entry. Well, that same anchor new high yesterday, it was the same thing. Going into the close, we closed below those levels and really on our entry. And you can see as soon as the market had reopened, there was 50% retracement longs that began holding, and we had a retest here of that 179.18 here level in the after hours that has held. We will continue to be bullish above this 61.8, and it's a big 61.8 at 176.23. 176.23. Bonds will be continue to be bullish above. There is shorts that have been sold into, and you can, this is such a big range. You can absolutely, play the other side. The trend is higher, but there is traditionals that are holding to the short side for the time being. We actually completed one on the close yesterday, and then you can see we broke the next measured move and then set up really in a retest of that long. So the higher time frame does remain up, but a break below 176.23 would end this bond trend for the time being. Moving on to the 10-year note, backing out to the daily chart, the 10-year note just doesn't seem to have the oomph to get down to the full 50% retracement. It's a little bit ahead of the 30 year as far as its setup. We have the 132.13 extension, which begins from the high of the 3rd of September. The 38% retracement is a 137.18. The 50% is still untested. It is a 136.18 half. It is a 136.18 half. But you can see, just like the bond market coming out of those lows, we held halfway backs in our overnight session as the market had reopened and we've kind of settled the dust towards the end of the day. We're holding the 50% retracement long from those levels right now. But still, the higher time frame support levels are 137.18. That's a retest of the 38.2. This halfway back has already traded, so I'm just going to remove it. If it completes, you can draw the next measure move. 137.18 and 136.18 half are the two support levels there for ZN. Moving on to the VIX, guys, and just like the bond market, I wanted to show you guys why really the VIX and the ES, everything was the same as last Wednesday's close. So last Wednesday, when the market really got tanked, the ES was making a new high or a double top, and the VIX held a halfway back long. And I mentioned this in the startup trading chat room. The VIX was holding longs into the close on Wednesday. Okay, and the S&P was at its high. So there was this divergence between where the VIX was relative to its range and where the S&P was. Well, guess what? The VIX holding its long setup ended up being the truth because the indexes just double topped and got slammed out of last Wednesday. Well, we had the same thing happen yesterday. The VIX was holding the full 50% retracement at 41.88. Okay, the indexes went back to their highs. Well, what's happened here in the overnight session? The VIX has continued to rally. Its profit target is 48.68. We've held pullbacks from that low. Okay? The pullbacks in the VIX is what is creating and arbitraging. As long as the VIX is holding its long setups, the S&P goes lower. It's really that simple. And this is a very crucial tool for us to understand. Now, if let's look at yesterday in the S&P. The S&P into the close made a new high. It made a new high. The S&P into the close made a new high. However, out of that new high, the VIX had a significantly higher low. Significantly higher lows. In fact, it was a halfway back long setup, and we rolled over. We just totally rolled over. We broke the setup from the long side, confirming the downtrend. And then the S&P had its next entry into the short trend this morning at 5 a.m. 5 a.m. East Coast. That downside target is 27.5275, and then we could begin looking for that next measured move. So that downside target is going to be the bottom of the range. But right now, the extension of the higher time frame, I have downside targets on the hourly chart at 2640 in the S&P 500, and it's possible, guys, that this week we see a full 50% retracement from the 2016 low to high. Okay, and that's 2600. The 2016 low to high is 2600. It's possible we see that this week or next week. By no means is this trend bullish. In fact, it's extremely bearish. We're not even close to being bullish yet. These setups are getting even more bearish. We could not rally into the full 50% retracement short from that last swing high. We could not rally up into the 29.16, the 29.20 level, which was our major resistance. We could not get up there. That's pretty significant. It's not a good look for the S&P. All right, moving on to the Dow. Could not rally into the full 50% retracement short in the Dow. We could not rally. And the reason is because the VIX is hitting its support before the indexes are trading their resistance. So we double topped just like we did in the ES. Look at this swing mark. Right up to it. Right up to it. We then broke our opposing long setup and came into a 50% retracement short. That downside target is 23,916. And then we could draw our next measured move. Moving on to the NASDAQ. Going out to the hourly chart. We had a double top, end of day. We came up into really the open of the week here in the NASDAQ. And this is all, and once again, it's an arbitrage between the VIX. It's wherever the indexes are, wherever they are, when the VIX trades its long is all that matters, which is kind of crazy because the VIX is literally leading the price action of the market. Because when the VIX comes into its setups, it does not matter where the ES is. It does not matter where the Dow is, and it does not matter where the NASDAQ is. They are sold. Okay, they are sold. We did not get up into the full 50% retracement. We still can, and it would still be a bearish setup if we did. Just to be clear, that is an 84.08. Excuse me. That next halfway back short is what we're going into this morning. That's what we're going into this morning. Its downside target is 80.15. Remember the higher time frame NASDAQ targets, guys, did not complete. There were 77.35. We did not complete those. Moving on to oil. Guys, we finally traded that big extension. There was a short squeeze. Just took everybody out last night in CL. 43.32 to low was the 35.30, 50% retracement. Okay, and I taught this entry. When we're running up into levels like this, you got to wait for a swing mark. Okay? You got to wait for a swing mark. So that's this blue dot up here. And then you draw the halfway back. Otherwise, because these 61s and these levels are so big, I mean, you had to eat it. The market went straight up $1 in your face. Okay? I'm using a 30-tick stop and a 30-tick first target in CL right now. We traded that entry at 35.70s, 35.69s, and we have been trending down ever since. Okay, right now the next entry into the trend that I would consider would be an extension, I believe, from that low. Because we traded it once. Okay, to target, same anchor, new low. The 50% is a 33.96. USD JPY, there were some levels we went over yesterday. Pretty good stick. There was this extension from 109.88 to low. It also lined up with a gap fill, and then I had a leg start on this high. 105.53 was the 50% retracement of the extension, and then we just had, an hourly leg start. That's this white dot here on my screen at 2 a.m. from Friday. Trade to the tick. We rotated out of those resistance levels. We need to confirm these downside targets by breaking out of and down through 109.72. I don't really have much to do outside of look at a second test here. This trade is like, if you see it and you're not in it, it's not over. So if you're not in this trade, we need to break down below 102.72 and then look for a new entry. So a break below the long setup to create the next short setup. Moving on to the AUD/USD. We came into yesterday, and a lot of these dollar-related trades did really dip. This white line here, this is why I always have like leg starts in swing marks, not just fibs. Because if you just draw fibs, you're not looking at somewhat what other traders are looking at. But the beginning of the rally going back to March 2nd, it was just a daily leg start. That is what we came down to and reversed from yesterday. But that was also inside of this halfway back long. Okay, this halfway back long has a target. This halfway back long has a target at 67.72. So this is, the potential beginning of a swing trade because it is, we're at basically six. It's a 272 pip target. It's pretty big. Coming out of that low, we began our bid in the overnight session. The swing low to high traded, completed profit targets, and then that low to high has just traded its next entry. We have just traded the next entry in the AUD USD here at the 65.12. It has an upside profit target at 65.51. 65.51. Moving on to the euro, I'm going to back out to the hourly. There was this traditional that I had drawn up and I had mentioned in the room yesterday. It was a 112.95. Last week we had it was Friday's low to high. Last week you had Friday's low to high come into this traditional. So it was a draw that I wouldn't typically see or view, but I was aware because we traded this traditional that next level was a potential entry from the 110.94s to highs. We have held that support. It also just lined up with this gap fill, which is, I like to see a double confirmation level like that. And then we had this trend line too. So we have a trend line, Fibonacci retracement from a swing low to high and a gap fill. So that's kind of what I like to see. Anyways, this euro, assuming we stay above the 112.48s, has an upside profit target of a 115.90. It's pretty far away, huh? 115.90 would be that upside target. And then last but not least, GC here. Guys, we have reconfirmed the support. This has been a pretty sloppy trade for some time. I mean, we had a really big run. And I mean, these ranges in gold are huge. This candle my mouse is over is 37 points. Coming out of the low, we had a halfway back. We then went into an extension. And then you'll notice last week we had that extension and then we just consolidated into Thursday. Well, that same anchor new high traded its 50 on last Friday. And then we've been going, excuse me, hope I don't have the corona. We've been going basically sideways since then. Now, at the end of the day yesterday, we did pierce this 61. But it was at the end of the day, literally at the close or going into it, and then we immediately began bidding right back above. So I'm still leaving this extension as is. There's so many different variations of long setups that I'm leaving that extension as is. And right now we did break the next move. So I would look for, and I'm going to identify a sequence here in the overnight session, just see what we're rallying from, if anything. Yeah, I'm going to use this low. Ooh. Hold on, I got to zoom out. I'm going to use this low here from 1648 just because every time we've come into it, it seems to have produced a bid. Okay, you can make an argument that this next low to high is holding, but I'm going to be a little more conservative than that. As far as a next entry into the trend here for GC, I'm looking at that halfway back that would exist at 1659.9. 1659.9. Okay. And then moving on to silver. Honestly, this thing just not doing anything. Right now, we are just sitting inside of a lows of Monday too high. We're just consolidating inside of this. We did break out of the opposing short, so 1687.5 is your support level. 1687.5 is your support level. And your hourly upside target is 1735. So one more market I want to go over here this morning. That's the GBP USD. This had a lot of news this morning, and really retested the bottom of our ranges. This is going to be interesting to see how this develops out of this low. I was at least, anticipating this full 50% retracement pullback from Friday's low of not last week, but the week before, too high. Now, we have heavily broken below that level, but at the end of the day, we just tested the bottom of the range, and coming out of that GDP and all those news events, we have begun, I should say, a long sequence. Okay, and that long sequence is what was front run by a perfect four. That's a perfect four pip front run, which is, in my opinion, a bullish signal. You can see we are still consolidating. If we began completing the 130.11 profit target, so I'm going to set an alert up there. If we began making our way up in the Great Britain Pound USD, I'm going to assume that really, even though we have broken that daily draw, we'll eventually make our way in a series to our profit targets, because there is a dollar weakness trade going on. There's a dollar weakness trade with the euros rallying. You can look at the AUD. The AUD is rallying. The Great Britain pound is rallying. The Japanese yen to the US dollar is falling. These are all dollar weakness trades, and this is all coming out of the back of the fundamental shift of the Fed moving towards lower interest rates. They did a cut the other week, emergency cut, and they're expected to do another one again next week. Whether they do or not, we will find out. But these are big currency trends that are developing in our markets, which are pretty interesting. But with that being said, that's going to wrap up this morning's market analysis. If you enjoyed this content, please give this video a thumbs up. If you'd like to join my trade room, click the link below. Otherwise, everybody take care, trade safe, have a wonderful day, and I'll catch you guys by sharing my levels there. Bye-bye.